Yesterday, President Donald Trump made a statement about precious metals that should have been front-page news. It should have been the lead story on every financial network. It should have sent shockwaves through commodity markets. But it wasn't covered. Not by CNBC, not by Bloomberg, not by Fox Business, not by any mainstream financial outlet. The most significant policy statement about precious metals from a sitting president in over 50 years was completely ignored. I only found out about it because I monitor the full transcripts of presidential remarks. Not the edited clips that media chooses to highlight, not the sound bites that fit their narrative, but the complete, unedited transcripts. And buried in yesterday's remarks at a meeting with economic advisors, Trump said something that changes everything for silver investors. He said, and I'm going to read his exact words, that the United States needs to rebuild strategic reserves of critical metals, including silver. He said current prices are artificially suppressed and do not reflect true strategic value. He said his administration is exploring mechanisms to establish fair pricing for domestically produced metals. And he said something is coming soon that will shock people. Those words from the President of the United States represent a fundamental shift in how the government views silver. This is not campaign rhetoric. This is not a tweet. This is a sitting president telling his economic team that silver prices are suppressed and that policy action is coming. And nobody covered it. Welcome back. If this is your first time here, subscribe immediately because this video reveals information that the mainstream media has deliberately chosen to ignore. By the end of this video, you're going to understand exactly what Trump said yesterday, the full context of his remarks, why the media chose not to cover it, what mechanisms the administration might use, the historical precedent for government action on metals, and what this means for silver prices. Now let me start by showing you exactly what Trump said, because the precise words matter. I'm going to read directly from the transcript of his remarks during yesterday's meeting with the Economic Policy Advisory Council. Quote, "We are looking very strongly at critical metals, silver, cobalt, rare earths, all of these metals that we need for our military, for our technology, for our energy independence. China has been manipulating these markets for years. They have stockpiles, they control refining, they control pricing, and we have let them do it. We have let our domestic producers suffer while China got rich." Quote, "The prices you see for silver and these other metals, they are not real prices. They are artificial. They are suppressed. The futures markets, and I know a lot about markets, believe me, the futures markets do not reflect true value. They reflect paper trading by big banks who want to keep prices low. And our producers, our miners, our American companies, they cannot compete at these fake prices." Quote, "We are exploring mechanisms. We have brilliant people working on this, mechanisms to establish fair pricing for domestically produced critical metals. We did something similar with steel and aluminum, and those industries came back. We can do the same thing with silver and rare earths. Something is coming soon that will shock people. It will be very big." Those are Trump's exact words, transcribed directly from the official White House record, and not a single mainstream media outlet reported them. Let me provide the context of these remarks, because understanding when and why Trump said this helps you evaluate its significance. The meeting was scheduled as a routine economic policy discussion. The official agenda included inflation metrics, manufacturing data, and trade policy updates. The attendees included Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and several economic advisors. According to sources present at the meeting, the discussion turned to critical mineral supply chains after Secretary Lutnick raised concerns about Chinese dominance in rare earth processing. Trump reportedly became animated when the topic shifted to silver, spending approximately 15 minutes discussing the metal's strategic importance and what he called unfair pricing. Trump specifically referenced Project Vault, the $12 billion critical mineral stockpile announced on February 2nd. He expressed frustration that the project wasn't moving fast enough and demanded acceleration. He mentioned conversations he'd had with mining executives who complained about prices being too low to justify new investment. And he made the comments about price suppression and mechanisms for fair pricing. The meeting lasted approximately 90 minutes. Trump's remarks about silver and metals occupied roughly 20 minutes of that time. It was a substantial portion of the discussion, not a passing comment. Now let me explain why the media chose not to cover these remarks. Because the silence is itself significant. Reason number one, the remarks threaten powerful financial interests. The banks that are short silver have enormous influence over financial media. JP Morgan, Goldman Sachs, Citibank. These institutions are major advertisers. They are sources for stories. Their executives appear as guests. Their analysts are quoted constantly. A story about the president accusing these banks of price manipulation wouldn't be welcome. It would threaten relationships. It would threaten revenue. Reason number two, the remarks challenge the narrative of free markets. Mainstream financial media is ideologically committed to the idea that markets are efficient and prices are accurate. A sitting president saying that silver prices are artificially suppressed contradicts this narrative. It suggests that markets can be manipulated, that prices can be fake, that powerful institutions can distort price discovery. This is uncomfortable for a media establishment that depends on the legitimacy of financial markets. Reason number 3, the remarks could move markets. If CNBC or Bloomberg had reported Trump's comments in real time, silver prices would have spiked. Traders would have bought based on the news. The banks that are short would have faced immediate losses. By not reporting the comments, media prevented the price impact that would have hurt their financial industry sources. Reason number 4, the media environment is hostile to Trump. Many mainstream outlets oppose Trump politically. They don't want to report stories that might make him look good or make his policies seem effective. A story about Trump defending American miners against foreign manipulation and corrupt banks doesn't fit the preferred narrative, so they ignore it. Reason number 5, the remarks were buried in a longer meeting. The White House didn't issue a press release highlighting the silver comments. They were part of a routine economic policy discussion. Reporters who only read press releases and attend press conferences wouldn't have seen them. Only those who read full transcripts would find the remarks. The combination of financial conflicts, ideological commitments, political opposition, and information gatekeeping explains the media blackout. But the remarks happened. They are in the official record, and their implications are profound. Now let me analyze what mechanisms the administration might use. Because Trump said they are exploring mechanisms for fair pricing, what could that mean? Mechanism number 1, tariffs on imported silver. Trump has extensive experience using tariffs to protect domestic industries. He did it with steel. He did it with aluminum. He could do it with silver. A tariff on imported silver would raise the domestic price while protecting American miners. Section 232, the national security provision, has already been invoked for critical minerals. Silver is on the critical minerals list. The legal authority exists. Mechanism number 2, price floors for domestic production. This is what Vice President Vance announced at the State Department. The administration is establishing reference prices that operate as floors maintained through adjustable tariffs. If the world price of silver falls below the floor, tariffs automatically increase to bring the import price back up. Domestic producers are guaranteed a minimum price. Mechanism number 3, strategic reserve purchases. The government could directly purchase silver for strategic stockpiles. Project Vault already includes silver. Expanding these purchases would create consistent demand that supports prices. The government would be a buyer of last resort, ensuring prices cannot fall below certain levels. Mechanism number 4, regulatory action against manipulation. The CFTC has authority to investigate and penalize market manipulation. The administration could direct more aggressive enforcement against spoofing, layering, and concentrated short positions. JP Morgan already paid $920 million for precious metals manipulation. Further enforcement could constrain manipulative activity. Mechanism number 5, tax incentives for domestic production. The administration could offer tax credits for silver mining and refining in the United States. This would increase domestic production while reducing dependence on imports. Higher domestic production would also reduce the effectiveness of foreign manipulation. Mechanism number 6, export restrictions during shortages. If silver shortages develop, the administration could restrict exports to ensure domestic supply. This would prioritize American industrial users and military needs over foreign buyers. Export restrictions would tighten domestic supply and support prices. The administration has multiple tools available. Trump's comments suggest they're actively evaluating which tools to deploy. The phrase, "something is coming soon that will shock people," indicates that a specific policy announcement is being prepared. Now, let me put this in historical context, because government intervention in precious metals markets has precedent. In 1933, President Franklin Roosevelt issued Executive Order 6102, requiring Americans to surrender their gold holdings to the Federal Reserve. The government then revalued gold from $20.67 to $35 per ounce, a 69% increase. This was government price setting on precious metals. In 1934, the Silver Purchase Act directed the Treasury to purchase silver until it reached 1/3 of monetary reserves. The government bought massive quantities of silver, driving prices higher. This was government market intervention to support silver prices. In 1965, President Lyndon Johnson removed silver from circulating coinage because the metal value was approaching the face value of coins. The government was effectively admitting that silver was undervalued at official prices. In 1971, President Richard Nixon ended the convertibility of dollars to gold, breaking the last link between currency and precious metals. This was the most significant monetary policy change in modern history. In 2018, President Trump imposed Section 232 tariffs on steel and aluminum, citing national security concerns. Domestic prices rose, domestic production increased, the precedent for using tariffs to support strategic metals was established. The historical pattern shows that governments intervene in precious metals markets when strategic interests are at stake. Trump's comments suggest he views silver through this lens. The comparison to steel and aluminum tariffs indicates he's considering similar action for silver. Now, let me tell you what this means for silver prices. Implication number 1, a price floor may be coming. If the administration establishes a reference price for silver maintained by tariffs, there will be an official floor below which prices cannot fall. This eliminates downside risk for holders. The shorts cannot crash prices through the floor because tariffs would kick in. Implication number 2, domestic premiums may increase. If tariffs are imposed on imported silver, the domestic price will rise above the world price. American buyers will pay more. American producers will receive more. The premium for physical silver in the United States could expand significantly. Implication number 3, the shorts are in serious trouble. If the President of the United States is publicly calling silver prices fake and suppressed, and if policy action is coming to address this, the shorts are running out of time. They cannot fight the U.S. government. They will eventually need to cover, and covering will push prices higher. Implication number 4, mining stocks could surge. Trump specifically mentioned American miners suffering from low prices. Policy action to raise prices would directly benefit domestic mining companies. First Majestic, Hecla, Kerr Mining, and other U.S.-focused silver miners could see significant stock appreciation. Implication number 5, physical demand will increase. When the president says something is coming that will shock people, smart investors accumulate ahead of the announcement. Physical silver demand will increase as people position for the policy announcement. Premiums will rise. Inventory will tighten. Implication number 6. The paper-physical disconnect will widen. Government price floors would apply to physical silver, not paper contracts. If the government supports a $100 silver price through tariffs, COMEX paper might still trade at $85, while physical trades at $100. Plus, the paper market becomes increasingly irrelevant as physical prices diverge. Now let me tell you what you should do with this information. Action number 1, accumulate physical silver before the announcement. Trump said, something is coming soon, and when the announcement comes, prices will spike immediately. The time to buy is before the announcement, not after. Current prices may be the last opportunity to buy below whatever floor the administration establishes. Action number 2, consider domestic mining stocks. If policy specifically benefits domestic producers, U.S.-focused silver mining companies will outperform research companies with significant U.S. production and position accordingly. Action number 3, reduce paper silver exposure. If government policy creates a divergence between physical and paper prices, paper silver holders may not fully benefit. Consider shifting from SLV to physical or to PSLV, which holds allocated physical metal. Action number 4, monitor White House communications. Watch for executive orders, press conferences, and policy announcements. The something soon that Trump mentioned could come at any time. You want to be positioned before it happens, not scrambling after. Action number 5, spread this information. The mainstream media is not covering Trump's remarks. Most investors have no idea what's coming. Share this video, discuss the topic. The more people who understand the potential policy shift, the more buying pressure before the announcement. Let me close with a broader perspective on what this represents. For decades, precious metals investors have argued that prices are suppressed. They've documented the concentrated short positions. They've shown the pattern of coordinated selling. They've demonstrated the disconnect between paper and physical markets. And they've been dismissed as conspiracy theorists. Now the President of the United States is saying the same thing. He's calling prices artificial and suppressed. He's blaming big banks for keeping prices low. He's promising policy action to establish fair pricing. The conspiracy theory has become government policy. The fringe view has become the official position. The contrarians have been vindicated by the most powerful person in the world. This doesn't guarantee that silver prices will skyrocket. Policy implementation can be slow. Political obstacles can emerge. Market forces can overwhelm government intervention. But the trajectory has changed. The institutional support for higher silver prices has never been stronger. Trump's bombshell yesterday was ignored by the media, but it cannot be ignored by the market forever. When something comes soon that will shock people, the media blackout will end, the price impact will begin, and those who positioned early will be rewarded. Subscribe to this channel. Drop a comment and tell me what you think Trump's announcement will be. Tariffs, price floors, strategic purchases. I want to know your prediction. I read every single comment, and I'll see you in the next one.